The SEC has some interesting changes proposed coming to the pattern day trading rule, and this is pretty interesting to watch what the FINRA is proposing and potentially doing with this rule. And the FINRA is the Financial Industry Regulatory Authority. I think I got that right. But they are in charge of regulating how the financial industry works, including things like our pattern day trading rule. And I wanted to cover what this proposed change is and who it affects, how it could possibly affect day traders, and what kind of the timeline is for all of that. So let's get into it. The current rule, according to the SEC, is that any trader engaging in more than 3 day trades in a 5-day period is considered a pattern day trader. And if you are flagged as a pattern day trader, then you have to have at least $25,000 in a margin account to be able to make those trades. That means anytime you open and close a trade in the same day, that counts as a day trade. And if you do that more than 3 times in a 5-day period, you could end up having your account on hold for 90 days, or you have to increase your funds in that account. And there are some ways around it that we've kind of had to be creative with as options traders. I used a lot of these strategies building my first account. And that's things like using a cash account where you have a set amount of cash in your account, and every time you place a trade, that is deducted. So you have a limited number of trades that you can place in a day. There is that workaround. And there are some other kind of more creative ways like cash settling options. And not all brokers allow that, but those that do will let you hold an option over expiration if it's a cash settling option like SPX. And then you'll either get that credit or debit on your account, and it doesn't count as closing a trade because it's expired. Not all brokers do that, but some of them are cool and do it that way. And of course, this rule doesn't apply to all assets. It does apply to things like stocks and options. It doesn't apply to things like futures and Forex or crypto. So the goal of FINRA's whole proposal in changing the pattern day trade limit is to make things more accessible for home retail traders and kind of level the playing field between what we're able to do with things like futures and crypto and Forex and move that on to things like stocks and options. The proposed rule is to bring that $25,000 limit all the way down to $2,000. And if you think about what we get in prop firms, or what a lot of us what that range is for funding our first futures account, is kind of in that same range. So I think it makes a lot of sense. And that's exactly what the goal is, to kind of level that playing field so all of the assets are kind of equally accessible to us. Let's talk about the timeline. So last fall in October, they already had a hearing where public feedback was given, and that helped them get an outline so they could really put this proposal together. That's already done, but the deal isn't done yet. There's still a few steps that we have to get through with FINRA and the SEC. The first one is a FINRA board vote, which is coming this fall. Then after that vote, it'll move to the SEC, assuming it passes. If the SEC gets it and everything looks good when they review it and they're able to approve it, this could be going into effect as early as 2026. The rule could roll out really early in the year, and then it would probably likely take brokers a little bit of time to catch up and adjust all of their programs, but this would be a next year thing if it goes through. It's not a done deal yet, but the likelihood of this moving through is actually pretty high right now, and it's because it has a lot of industry support. It's not just us home retailers that want this. Bringing liquidity to the market can be good for a lot of things. But we do have the support of a lot of big brokers like Robinhood and Schwab and Fidelity, and that's really helping to help move this through. The pushback, of course, is that the home retail traders' liquidity could be used as kind of that nasty liquidity that we hear about sometimes. We don't want to become liquidity. We want to participate in the liquidity. So there's definitely concern from some of the regulators about retail traders ending up really over leveraged because they're able to do this. So these approvals aren't guaranteed yet. They just look good right now. So this is something that we're still on watch. And I think even if this doesn't go through, this conversation is going to be pushing for some sort of change, even if it doesn't look exactly like they're proposing right now. So those that are going to be affected are U.S. traders who are day trading stocks and options in U.S. brokerage accounts with margin accounts. If you're using a cash account, you're already kind of moving around this rule, but it could be that the cash accounts end up getting kind of a similar treatment, or that you can just go ahead and move into a margin account a lot sooner. So if this regulation goes through and brokers are now able to offer margin accounts with only $2,000 account balance, what is that going to end up looking like? Are they just going to give it out to everybody? Probably not. There might be some sort of requirements that you have to do, or it could be some training or even some performance requirements. So I know when I first applied for a level 2 access for my first options account, I didn't have options experience yet, even though I wanted to have that and had been going through classes and training. So my broker required me to go through their courses to make sure that I understood what an option was, what I'm doing, how to place the trade, all that sort of thing, which was, I mean, that's a good idea. Training's good, right? So I did go through that course in order to get my data access the very first time for being able to even trade options in the first place. And I suspect that they might have some requirements like that, where either you need to have a history where you've actually traded these things before, or they're going to make sure you have the knowledge to be a first-time beginner and hopefully not destroy your account right away. Some brokers might be really, really fast to adopt all of this, and some might take a lot longer. The cool thing is the brokers have an opportunity to put some interesting competition forward to consumers. This is good for us as the retail traders. We're the consumers for these brokerage accounts. And if there's a new thing that they can offer and they have an opportunity to offer it in a really cool way, they can end up bringing in some new customers. So this is an opportunity for brokers to kind of shake things up and find some new customers by offering some cool things as well. But of course, one of my big questions was, will this bring more ZeroDTE traders, also known as ZeroDTE degens? And if you don't know what a ZeroDTE is, that is an option that has 0 days till expiration. They expire that day, they get extremely volatile. The value can drop out of them really, really quickly. You can also gain value in them really quickly. So yeah, popular among degenerates. So probably we're going to have more ZeroDTE degens joining us in the ranks. That's just simply because accounts that couldn't do it before now can. That makes a lot of sense, right? You can fund your account for a lot less. We're going to have more access. And of course, that means more liquidity, more participation. The more volume we have, the more kind of stable and sensible the markets tend to be. Of course, liquidity can be good in that it's easy to get in and out of our trades, and the market can move in a lot more predictable ways. But it can also be bad liquidity. You don't want to become liquidity. So that is kind of the risk on it, that a lot of home retail traders could potentially become liquidity. That's the concern. So of course, we need to be educated and be careful about that. The other risk is, with this increased retail traders, could we end up with more volatility and therefore, more gamma squeezes and really just faster trade cycles where the market moves a lot faster? Sounds more fun to us though, doesn't it? Sounds more fun to some traders. The market is certainly changing and becoming a little bit different place than it was 30, 40 years ago. But that's cool, right? And here's the other big thing I was wondering. Will this make prop firms more or less appealing? And this is kind of an interesting topic. So the thing behind a prop firm is you have a really low cost of entry. You can just, for a monthly subscription fee, sign up, do an evaluation, a trading evaluation, and potentially earn funding. That funding is typically equal to about $2,000 of leverage in the market for a lot of these accounts. On average, that's kind of where we are. That's also about where a lot of self-funded futures traders start. So all of this is starting to make sense, right? It's all kind of evening out. So if the prop firms are less than $2,000, which is kind of where a lot of people fund their self-funded futures accounts, and they're a low barrier of entry at $100, sometimes less than $100, are we really going to be bringing those traders over? I don't know. We might bring some of them over, not all of them. The more responsible ones, though, I think we might get. However, what I'm wondering, and I've talked to prop firms about this before, so I know that they're interested. Will we have some prop firms that are able to offer options prop firms? That would be really cool, right? So right now, they're basically offering you $2,000 of leverage to trade futures for a relatively low cost of entry. And maybe that's where these little futures accounts could be. So they might be able to offer us some options accounts through a prop firm with that same kind of monthly fee structure where then you're able to do profit sharing when you're successful. That's interesting to me, and that's going to be a huge opportunity for prop firms. And again, really good for competition, which ends up being good for us, the day traders. All right, y'all. Well, let me know what you think. And if you're a futures trader, is this going to help you kind of get into options a little bit more with this lower barrier of entry? Are you getting more interested? And I'll be following up on this. So, be sure to like and subscribe and turn notifications on so we can follow up with this. And I also post lots of good trade ideas and all sorts of educational content that it's the stuff I wish that I had when I was starting to trade. So hopefully it's helpful to y'all. And if you're interested in the prop firms, I do have some discounts in the description. And if you have no idea what I'm talking about, I have a prop firm playlist that I would highly recommend. But until then, we'll be watching this. So I'll let you know if I hear anything else interesting on this topic. And I will see you real soon. Thanks for joining me. Love you.